This is the Daily Market Comment by Rafi Boyajian. I'm Maria Bashir-Davies. Thanks for joining us at XM.com. Fears about a deeper banking crisis receded further on Tuesday, giving risky assets another leg up as beaten-down bank stocks attempted a rebound. Concerted efforts by the U.S. Treasury and Federal Reserve to prop up the banking sector seem to be slowly but surely calming nerves about more dominoes falling from SVB's collapse. The latest intervention came as it was announced that First Citizens Bank would buy most of Silicon Valley Bank's assets, while the Fed is considering expanding its emergency lending facility to maximize its support to troubled First Republic Bank. Meanwhile, in Europe, the absence of a policy response to quell the panic about Deutsche Bank suggests that EU regulators and the ECB must have some confidence in the bank's finances. And although the stock is now recovering, that has more to do with the rebound on Wall Street. The S&P 500 closed up for a second day on Monday, but failed to hold onto earlier gains that briefly took the index above the 4,000 level. The reason for the pullback was the drag from technology shares, as the easing of the crisis sparked some rotation away from defensive names such as Microsoft, Apple, and Alphabet back into financials. Despite the steadier tone in the markets that's reflected not just in equities but also in bond yields, which are ticking higher today, investors are still pricing in about 50 basis points of rate cuts from the Fed by December. This likely suggests that the stress in the financial sector is seen to be significant enough to leave a damaging mark on the U.S. economy, and that probably explains why the greenback remains on the back foot. The U.S. dollar is down against most of its major peers today. However, the lingering anxiety about the health of the global financial system is providing some support to the safe haven dollar, making it difficult for the likes of the euro and pound to convincingly reclaim key levels. Nevertheless, the somewhat brighter mood was evident in commodities too, lifting crude oil from the doldrums after futures slumped to more than one-year lows last week. Gold, on the other hand, is slipping for the third day, as the worst of the banking turmoil seems to be over, for now at least. This is today's Daily Market Comment. Thanks for joining us at XM.com.